Hey everyone! Welcome back to OFIJAN Exams, your go-to channel for exam preparation and study tips. Today, we're deep diving into the University Exit Exam, covering randomly selected questions for the accounting department. Stick around to sharpen your knowledge and ace your exams. To access the question, let us go to ofijan.com and look at the exit exam question for the accounting department. First, open the Google Chrome browser on your computer or smartphone. Type OFIJAN Exam into the Google Chrome search box. Then press Enter. You'll see ofijan.com appear as the top search result. Click on the link to open our website. Once on the home page, look for the section that says 2015 Exit Exam or use the navigation menu to find past exam questions. Scroll down to find the 2015 Exit Exam questions for your department. There are a lot of department. Click on your department and open to view the exam questions. Here you'll find the full 2015 exam. You can read it online for today. I want to click on the accounting department and randomly select 5 questions to explain the question to you. First up, let's look at a classic business scenario question about maximizing profits under resource constraints. The first question. ABC company has only 25,000 hours of machine time each month to produce 2 products, X and Y. Product X has a contribution margin of $50 per unit and takes 5 hours to produce, while product Y has a contribution margin of $64 and requires 8 hours of machine time. If the company wants to dedicate 80% of its machine time to the product that provides the most income, what will be the total contribution margin? A. 200,000 BER. B. 240,000 BER. C. 210,000 BER. D. 250,000 BER. The key to answering this is understanding contribution margin. Product X gives us $50 per unit but takes 5 hours, so its contribution margin per hour is 10 BER. Product Y, with a margin of 64 BER per unit and 8 hours per unit, yields 8 BER per hour. Clearly, Product X is more profitable per hour. With 80% of machine time, which is 20,000 hours, dedicated to Product X, ABC can produce 4,000 units. That's 4,000 times $50 BER, totaling 200,000 BER. So the answer is A. Mastering how to allocate resources efficiently is crucial in a skill set you'll use in the workplace. The second question, dive into a fundamental principle in finance, managing risk through diversification. When you start investing in one company's stock and then add stocks from other companies, which type of risk decreases? A. Systematic risk. B. Unsystematic risk. C. Market risk. D. Inflation risk. The answer is B. Let me explain why. Unsystematic risk, or company-specific risk, can be reduced through. This risk involves events like poor management decisions or sudden product recalls that only impact a particular company. By investing in a variety of companies, these risks balance out. However, remember that systematic risk, which affects the entire market, like economic downturns, cannot be diversified away. This understanding is key for making wise investment choices. Now, let's discuss what happens when auditors face obstacles in examining a company's financial statements. On question number 3. In which situation might auditors say they can't give an opinion on a company's financial statements? A. The company is profitable. B. The audit was completed early. C. There are significant scope limitations on the audit. D. The company has good internal controls. The answer is C. When auditors are restricted from accessing key financial records or evidence is incomplete, they may issue A. This means they cannot determine the financial statement's accuracy. For instance, if auditors can't inspect inventory records due to missing data or restricted access, they must disclaim an opinion. This could indicate serious transparency issues and is a red flag for investors and regulators. It's vital to grasp this for understanding in financial reporting. Next up on question number 4, let's break down the concept of the risk structure of interest rates, crucial for understanding investments in bonds. What does the risk structure of interest rates refer to? A. The relationship among interest rates for bonds with different maturities. B. The relationship among interest rates of different bonds with the same maturity. C. The effect of inflation on interest rates. D. The impact of central bank policies on interest rates. The answer is B. I will explain why. This concept describes how bonds, even with identical maturity periods, have different interest rates based on their risk levels. For example, a government bond is seen as safer than a corporate bond, so it has a lower interest rate. Understanding this risk-return relationship is essential for anyone working in finance or making investment decisions. It's a classic trade-off: higher risk, higher potential return. Lastly, on question number 5, let's talk governance. Businesses are regulated by the marketplace, but governments are different. So who governs the government? If businesses are governed by the marketplace, who governs the government? A. Private companies. B. Legislative bodies. C. The marketplace. D. International organizations. The answer is B. Governments are managed by legislative institutions like parliaments, which make laws, approve budgets, and oversee how public funds are used. Unlike businesses, which are driven by competition and profit motives, governments focus on public welfare and service. Understanding governance is crucial in fields like where the roles of these institutions are deeply analyzed. Thanks for watching. We hope this video clarified some essential concepts from the 2015 Ethiopian University Exit Exam. If you found this helpful, give us a like, subscribe for more exam insights, and drop a comment on which topics you'd like us to cover next. Good luck with your studies, and as always, keep striving for excellence. You can visit our website to get the exams. The link is in the description box.